Hi, welcome to Boss TV. Today we're going to be looking at investing in bonds. Now we're going to try to see how much we can make when we actually invest in bonds. Our budget today is about $20,000 because basically when you're investing in bonds, it makes sense to have like more volume. If you invest $1,000, you're going to make some money, and some bonds have like a limit or like a minimum entry amount. But today we're going to use $20,000 as our investment amount, and we're going to do some analysis to find out what that gives us and what investing internationally in basically different markets are going to give us. Let's jump right into it. So today, right now, I'm on the website called Bond eValue. So basically you can go there and check out different bond prices. Let's start out with like the first page, so you can see what we have here. So we have bond SRS at 3%, with a bond maturity date at 2037. So basically bonds are like that's like a quick Google review of bonds. You can find out it's a debt instrument used by governments to service the economy. So basically you borrow the government money, and then they use your monies to kind of like solve problems and pay you back with profit. They're a good way to invest, because we discussed that on our channel. So like check out our channel, Boss TV. We have a video specifically on bonds. If you check out our videos, go to the channel, check out the videos. We have a video specifically on bonds, and somewhere right there. Yeah, so this video is on bonds. Basically we have different videos as well, check them out. Basically what we're looking at is what bonds can do for you. Bonds are a good way to invest as well. So in some of our videos we looked at investing in crypto, XRP, Ethereum and all, but today we're going to be focusing on bonds. In other videos we also look at investing in gold, precious metals as well. Our focus today is bonds. So basically, in layman terms, in simple terms, a bond is like money you give. A bond is like an agreement between you and the government. You borrow them money, like maybe $1,000. Some governments have like a minimum entry point of $1,000, some $500. So you basically borrow them money from $1,000 upward, and then every year you get an interest based on the money you put in. For today's budget, we're going to use $20,000 because some of these bonds don't make any sense if you go something less than that. I'll tell you why. So let's go and find the American bond. So the US Treasury bond that kind of like matures in 2051 is giving you an interest of 1.875. So when I open my Excel sheet, you see what that means. I mean, why I laugh is because when you look at bonds and you look at crypto, you can see already in a day. Let's go to XRP. Already in a day, you can see XRP has gone up 8.4% just today. Sorry, XRP is down right now. Sorry, XRP was up today earlier. Let's go to Oryx. I think there's a. Let me check out Oryx and see what's on Oryx. Okay, the coins are going down now. Let's just see if we can get, yeah, of course, if we can get. So I'm looking at, let's check out CHZ. Sorry, just want to show something. I just want to show you what I mean by so CHZ on Binance has gone up 4% today. So crypto just basically today you have a growth of 4%. And you're looking at investing in bonds. Bonds are good. I'm not saying bonds are bad, but you're looking at the US Treasury giving you 1.87% per year. So you're waiting a year to get 1.84. Meanwhile, in a day you can get 4% on crypto. Well, there's value in bonds, so we're going to look into it. But I'm just trying to tell you why our budget has to be higher than maybe $1,000, because it probably won't make any sense. You won't see like the real benefits of investing in bonds when you don't have much capital. It's probably not really an interesting or exciting exercise if you don't have much capital as well. So it's good to have enough money when you're going into bonds. That said, so let's check out some bonds. You have Hong Kong maturing at 2051 going for 2.3%. So what this means is, for bonds you have it's like a rolling investment where you put your monies in, and then yearly the government gives you money until this termination date. So for this bond is going to expire 2051, this bond is going to expire 2031. So we're going to look at bonds with long expiration dates and bonds with with less expiration, shorter time frame. Basically what you find is the bonds with a higher time frame, or bonds that go on for longer should have a higher percentage in some countries. In some countries they tend to pay out less. Like in the US, you can see this bond is paying out 1.875%. But if you go further down and check out US Treasury, you can see bonds paid out. US Treasury paid out, yeah, for a bond expiring in 2032-38, US Treasury paid out 4.5%. So this is a different bond. It's already on. It's been going on for a while, I guess. It's going to mature 2030. But bonds are available today. As at now, for the US Treasury, you're looking at 2051 at 1.875. Because we're coming out of the pandemic, governments are trying to put back monies and all. So I guess policies have changed. So we're going to look at three ranges, like a low yielding bond, and then maybe a mid-range yielding bond. Like Turkey is yielding 5.875. I'd like to see what Mexico is yielding, 2.21. Like I said, these are different expiration dates as well. Morocco is yielding 3%. Let me see, there's another favorite of mine here. Saudi, yeah, Saudi is a good country as well, yielding almost 3%. What else? So basically, I'll put up my Excel sheet now. We're going to use three countries to review what these bonds would give if you had invested in them. Well, if you invest in them today, basically what you're going to make. So I want to make a clear picture of what I'm trying to do here. I'm trying to kind of paint a picture of investments where you know that if you put your money here in 10 years, this is what you're going to get for sure. And now what you need to know about bonds is that the higher the percentage, the more risky the bond is. For if you look at a country like Mexico, let's try and get Mexico here. So Mexico has about 1.45%. This one must have been sold some time back. You look at the ones being sold. Let's look at a different, like Uzbekistan, maybe a country like that has more risk. Oh, you can see, whoa, 14.5%. Let's check out another country that is riskier to invest, like Brazil. So Brazil, that should be about over 10%, I guess. Just a minute. Where is Brazil? Mexico, China. Let's get Brazil up here. Okay, Brazil should be somewhere around here, I guess they started them out with yield rates or maybe durations. Let's find out where Brazil is. Brazil. It was just up here. I just found it some moments ago. Yeah, so we have Brazil 5.63, and there's also 12% Brazil investment as well. Philippines 3.7. So basically you can see the bonds vary in different countries. So the higher the risk, the higher the return. Basically the lower the risk, lower the return. And the most safe one, the safest one, is the US Treasury, and that's why you see it's one of the lowest. So if you want to invest in US bonds, you get about 1.8%. Let me pull up my Excel sheet. Let's look at what that means for us in terms of investment. We're going to be investing $20,000 today. So let's pull up the Excel sheet and see what that means for us. So today we're looking at investing $20,000 in bonds. Now, time of cashing, so that's anytime that's appropriate. Right now, anytime the bonds sell, and then your cash out is basically going to be, if you wait until the bonds mature, going to be when the bonds expire. Or you can also sell your bonds before they mature, so that kind of gives you leg room to play around with. So you can sell your bonds anytime, basically, if you have a buyer. So we're investing $20,000 today. I'm going to use the US Treasury bill as the base for comparison, and that gives us 1.85%. What I just basically did here was try to get a difference on my Excel sheet that's going to give me that percentage, and then I just put $100 and I put $101 as the change, and that gives me the percentage basically. So if I'm going to work with something else, I want to get a 3% change, I'm going to put in maybe $3 or so and get a change as well. Let's see what this means for A micro investor invests $10, is going to get cents, basically 18 cents. Keeps on going up from there. And where it starts making it's kind of like more sense is when you invest about $100,000. That's why I said investing in bonds. I mean, even $10,000 is going to give you in a year. It's going to give you $185. Investing in bonds is something you need like a higher volume of cash to invest in, because the returns are not so great. I mean, if you want a stable investment, the returns are not so great. So you have to like put in more money. So you can see here, $10,000 is not really cutting it. You put this in crypto, you see what the difference is. But I mean, as if you make a gain. But right now, $10,000 is just giving us $185. $100,000 is where you start to see some kind of sensible gain. In a year, you're making $1,800, and then you have $1 million. You're gonna make $18,000. So for like professional investors, when I mean professional investors, like people that have made a lot of money in their life, people that have enough capital. I mean, they can live off bonds. I mean, you have like $10 million in bonds. You're basically going to be getting $180,000, like more like a salary you can spend, and your money sits down there for the next 33 years. So today's investor, you're looking at investing $20,000, you're going to be making $271 by the end of the year. Well, not bad in the US bond, basically. And then what you're going to be making in the period, basically. So you're going to be making, so what this part of the sheet shows is, it shows you how long your investment is going to be for. So long-term investor, if you invest today, 2022, and you keep your investment, if you invest in this US bond, it's US bond 2051, so it's going to, maturity date is 2051, so you're going to have the investments running down for the next 30 something years. So what that means is it's going to mature around 2052, I think. What that's going to give you is your money sits down there, you put $20,000 down. Every year you're going to get 2 payments. The first payment is going to be $185. That's going to come in the middle of the year. The next one is going to be $185 as well, and that's going to come at the end of the year. So if you put that together, in 2022 you're going to get $371. Same for 2023. You're going to get this at a steady payment coming on yearly. And now one of our videos I discussed like a system where you can use this to like set up a salary for yourself. Maybe I'll get into a video that shows that as well in the future. But basically now, if you invest $20,000 for 32 years, I think, what that's going to give you is $11,000 basically in this US bond. And now we go to the Morocco bond, which we saw was around 3%. If you invest $20,000, you're basically going to get $600 a year, and that's going to give, Morocco bond expires in like 10 years time. So in 10 years you're going to be making $6,000. Not so bad, like for a stable investment. The Saudi bond is going to mature 2029. It's for about what, maybe 9 years. But so what that's going to give is around $6,000 as well. So you're going to be getting $876 because this is quite higher than the yield for Morocco and for US bond. There are also high yield US bonds. So US bonds don't always go for this. So with different time frame, a different kind of like macroeconomic environment, you have US bonds yielding higher than 1.85%. But right now it's going for 1.85% based on what we saw. The Saudi bond is going for 4% and it's giving us $6,000 within the time frame. And then where you now have the real gains is like the Brazilian bond. So the Brazilian bond, it's going to mature 2030 in just a period of about 9 or 6 or 7 years. 1, 2, 3, 4, 5, 6, 7, 8. Maybe it's, let's say 9 years. You're going to be getting about $19,000. That's quite. So the percentage is higher because investing in Brazil is much more riskier. And we also saw the Uzbekistan bond was about 14%. So if I was going to bring out the Uzbekistan bond, that was supposed to be 2070, I think. So let's try and pull that up. Let's try and set that up here. So Uzbekistan 2070, 2037. Yes, Uzbekistan. I don't know if I'm spelling it right, but let's just go with it. 2037. So we're looking at 14 points. Let's call it 14.2%. We saw 14.3 or so. So basically, And we're looking at a yearly profit of 14%. For our investment of $20,000. This is basically 2,840. Similar to, close to what we had for the Brazilian investment. And then they spread that out to 2037. Let's see what that does for us in terms of profits. So 2037 is around here. 2037, yeah. So the total of this would most likely be maybe close to $25,000. Just basically seeing what these bonds, how they perform and what they yield basically. So you're getting $45,000, which is not so bad, which is not bad at all. I mean, $45,000 for investing, you're basically doubling your money. Seems like crypto to me. You're basically doubling your money. So what this video is supposed to show is that bonds are actually very profitable as well. They're a good way to go in terms of keeping your money. So you have high risk places like Uzbekistan giving you higher yields for your money, and you have low risk places like the US giving you very low yield. So the US, UK, you're going to see the same kind of price in terms of yields. You're going to see the same kind of interest in terms of yield. And you have the mid-level places like Saudi, Morocco. You have your Cyprus and co, and those ones give you like maybe 5, 3, 4%. And then when you look at these investments in the time frame you've invested in, so if the investment for the Uzbekistan was about the 10-year time frame, you see much more money here. So it looks much profitable to invest in riskier places if you have the guts to do that, because you make more money, you make close to crypto money in these investments. But if you want stability and you have like a large portfolio and you have a lot of money, it's best for you to invest in stable countries like the US. I also hear there's some negative yields as well. I think those started during the pandemic in Japan and places like that. Even Europe, like Germany, they were also employing negative yields. So that's what that means basically is when you invest, you're going to be getting minus 1%, minus 2%. That doesn't make any kind of sense. So like a run through to save the time, we looked at investing $20,000 and why $20,000? Why so much? Because if you check out investing less monies in bonds, you see that the yields are so small. Doesn't make any sense. And it took like $18 for investing $1,000 gives like $18 in a whole year. That's not, I mean, if you can hustle that on the street without, I mean, just by singing on the street with your guitar, you can make $18 maybe in a week. Doesn't make any sense. And a guitar costs less than $1,000. So when it starts to get higher, that's when the profits start to make sense. So I'm trying to get like a sensible volume, so I use $20,000 basically. Investing in US bonds gives you around 1.8%, Morocco bond 3%, Saudi bond 4%, and Brazilian bond 12%, Uzbekistan bond 14%. So you have time frames of ranging from 30 years to 10 years to 9 years, and then the yields for these time frames, although they are different, it's very obvious that the higher bonds yield more, and although they are more risky, it's better to go for the higher bonds. Now, in contrast to this, if you check out what assets like gold do, like what gold can do for you, there's a video we did on gold, silver, and platinum. You can see yielding a 3.5% increase for a time frame. Silver about 20%, I guess. Yeah, 24%. Platinum yielded something close to 14%. Bitcoin was crazier, obviously, in a review we did before. Check out the video. 265%. So you can see crypto, when you look at these assets, crypto still kind of like it's much more profitable than all these assets, and so although it's the most riskiest, it still makes a lot of sense for someone to look into bonds, because bonds use a lot of money as well. So you can find out, you can see here that the Uzbekistan bond is giving someone $45,000 for investing $20,000. So basically 2x your money, 2.5x your money, or something like that. So yeah, it's a good way to review. And let's go back to the charts and then kind of like wrap up this video. So for this, we looked at bonds basically, and what we tried to do was to try to flesh out I mean, what we try to do here is to make things very simple. This already explains what the sovereign bond is, basically. So you can go to bonding value, find out more about that. But I think you have to subscribe. So subscribe to their service for you to see more info about the bond. For instance, if you want to look at this treasury bond, you need to pay to find out the yield, the maturity dates, fixed, stuff like that. There's a yield analysis as well, which is blurred out here because we haven't paid. Basically, we haven't subscribed to their service. So all this information is going to be accessible to you. It's going to let you make like a more informed decision on paying for any of these bonds. Basically, what we needed was just the yield percentages, and that was good enough for us to do our analysis. So we looked at US Treasury bond, and we tried to look at mid-level bonds like Morocco bond, 3%. We also looked at bond from Uzbekistan, 14.5%. Oh, it was even less. So I can change that later on to get like a higher percentage. And we also looked at Saudi Arabia as well. So basically, bonds are very good for you. This site has a lot of like info and insights on bonds. You can check it out. There are different kinds of bonds to look at: sovereign, perpetual bonds, China yield bonds, masala bonds. This most likely is Indian green bonds, Latin American bonds, and stuff like that. So this site is quite good. So I recommend checking it out. For today's video, bond yields ranging from 1% to about 15%. It's good for you to check it out. Bonds are profitable. They're a good investment as well. A good investment as well as crypto and all that. So check it out. You can see that our profits range from about $11,000 in the span of 30 years to about $45 for the span of 9 years. If you like this video, please share with your friends, like and subscribe. Our channel is ReadyBoss TV. Like we said before, we have lots of videos. Please check us out. This is our video on XRP and other investments. Thank you for your support. See you on the next one. Cheers.